So let me go ahead and get started. Some of the things by now that I just want everybody to realize is this. Before I even talk about money and wealth, I want to talk about this, your mindset. This wealthathon was developed when I had the flu. The concept was developed in December. I had the flu from like December 27th through like January 8th. I'm still coughing every now and then, believe it or not. Like a month later, it's crazy. But I was in bed. I said to myself, Self, you've been blessed with a tremendous amount of knowledge, personal growth and self-development since I was 9 years old. Jim Rohn when I was 9 years old. Laws of Success by Napoleon Hill when I was 19 years old. Mentors that have made more money in a year than people will ever make in a lifetime. I've been blessed to make more money in a month than people make all year. How can we get more people to understand that if they shift their mindset, everybody in America can get wealthy? Now, the main thing is the first part, the shifting your mindset. The reason a lot of you guys are not going to get wealthy is because a lot of people just honestly won't get wealthy is because they are stuck in the box of mediocrity, complacency, neglect, negativity, self-pity, their past. I always tell people your rearview mirror is smaller than your windshield for a reason. You're supposed to look forward. Too many of us drive and we're looking backwards. What that means is you are certain to wreck. So mentally, I can say all I want and you can say all you want. You can put affirmations on the wall till you blue in the face. You can read your cards 5 times a day. You can go on the beach and do your dream board, and you can sip coffee all day with the fellas and join your investment club. If you deep down in the pit of your stomach don't believe that God put you here, and the book says, I give you power to gain wealth. God put you here to be your best self, best version of yourself, and expect more from yourself. Be your best self, be the best version of yourself, and expect more from yourself. And your journey through this thing called life is all about you getting better and better and better. So when I had the flu, I was thinking, oh goodness, I'm already coming into the new year sick. But guess what? I'm gonna come out blazing. 7 webinars, back to back to back to back to back for the first 5. I'm gonna take the weekend off, and here I am with the final 2. So if you don't do anything else, man, please go back and review 1 through 6, where you need to understand capitalism, the difference between capitalism, socialism, and communism. And those are just 3 of the isms, right? What America does with you mentally when you're little to get you to understand that giving the money to them is first priority. And you still grow up as an adult and you believe that, right? And you wonder why everybody that you see, especially these days with social media, Facebook, Twitter, Instagram, you see all these people doing extremely wealthy. How did he get a Bugatti? How did he get a Lamborghini? How? The difference is knowledge. Now, of course, you got some people that had an inheritance and their last name is Hilton or whatever, right? And that's fine. You got, hey, don't hate. Be inspired. I tell people, don't hate when you see somebody that's got way more than you. Be inspired. Hey, my last name may not be Hilton, but guess what? That doesn't mean you can't own a hotel. Write that down. Your last name may not be Hilton, but that doesn't mean you can't own a hotel. Be inspired. You have sometimes God will put people in your life to give you a little bit of jealousy. As long as that jealousy doesn't turn into envy and rage, right? And disgust. But sometimes you need to see somebody doing a little better so that you can strive for more. You need to always, they say, put an X on a human heart the day you stop having, desires to grow. That way you can always become the best version of you and continue to live in your purpose. But in America, as I was recapping, when capitalism exists, it's hard for you to do that if you don't understand the rules of the game. That's all the way back to webinar number 1. And I'm not going through each webinar. What I'm telling you guys is I spend a lot of time on mindset first, because until you change your core beliefs, it doesn't matter how much money you make. You will be broke again. Lottery winners are broke again 9 times out of 10 because winning the lucky number didn't change your mentality. So they go right back to the old habits they had. Now you got more money. In fact, a lot of people are worse off after they hit the lottery. Now, I know a lot of y'all saying, well, shoot, let me find out for myself. Let me find out if that's going to happen for me too. I know that's right. 360 million because you pulled a number. God got something in store for you. It's either going to be a good experience or a bad experience. But either way, you're going to experience something. We talked about the banker's secret, right? How to become the bank. What's the formula to become the bank? Why are you investing in retail instead of wholesale? It's because the bank sold you some retail goods while they took your money and invested wholesale. Write this down. The CEO of the bank does not have a savings account. The CEO of the bank didn't purchase a CD. He didn't. All right. You got to understand, what did the CEO do? He took everybody's money and he invested it. Well, Brian, why am I not investing? Well, because nobody's taught you how simple it is. How simple it is. Now, before I get into tonight's topic, I want to make sure this is clear. I am not a financial advisor. I am not a financial educator. I'm not the wealthiest person in the world. I've made a ton of financial mistakes. I have been in foreclosure before. I have literally had 10 cents to my name, 19 cents to my name, $19 in one account, $11 in the other account, about to lose my mind. I'm not a financial advisor. I'm not a CPA. I don't have an investment license. I'm a financial educator, right? I own a training company called Mentor to Millions. What that means is I teach millions of people all over the world how to change this first. And because I've lost $1 million, I can definitely teach you how not to do that. I believe in the law of reciprocity, which means if I continue to share and share and share, the universe will continue to bless and bless and bless. So that's why I'm here. I'm going to educate you tonight so you can go out and see that person with their license, see that CPA who knows the laws, see that financial advisor who has access to the funds and can show you through his computer what funds you need to, or her computer, what funds you need to invest in. But at least you'll sit down with those individuals after this 7-part wealthathon and say, that doesn't sound right. See, there's a lot of things that you should open your eyes up to once you start understanding money. You'll start seeing things totally different. It's called your RAS filter. It's like buying a car and then you see your car everywhere. The same thing happens with wealth. Once you start thinking about wealth and abundance, you see it all around you. Now that dilapidated apartment building that you used to just drive by, you'll start saying, wait a minute, what if that was a strip mall? What if gentrification for once worked in our favor? And we pushed everything out and put something positive in? What if that old school, instead of letting it go, we turned it into a recreation center and helped a lot of people in the community? Let me call 10 of my buddies who each have 100,000 each liquid. Let's put $1 million into something. Why can't I own a hotel? It's a franchise. A lot of them are franchises, just like anything else. Why don't I have a Holiday Inn? Why don't I have a Burger King or a McDonald's? You see, your RAS filter will go up, just like the automobile that you paid no attention to until you bought yours. Your RAS filter will go up and you'll start paying more attention to financial opportunities because you have yours. And that's my aim. All right. So let's make this thing happen. Tonight's topic is destroying the chainsaw massacre that's keeping you from your wealth. Now, where did I get the name Chainsaw Massacre from? Everybody needs to understand this. Tonight's webinar won't make sense if you don't get this. You have 2 financial goals you have to accomplish. One is your current lifestyle is paid for by your labor. That means you go to work every day to cover the expenses and the lifestyle you've amassed for yourself. Your second objective financially is your future lifestyle has to be paid for with your investments. If your future lifestyle is not paid for by your investments, that means you will always have to work in the future. Basically, you have no future. That means you will always have to do something. Instead of money working for you, you work for money. So I want y'all to type this in the chat for me so I can make sure you're still with me. Something has to work, just not me. Something has to work, just not me. Now, most people wake up and they're 62, they're 59, they're 65, and they wonder where the time went. Well, you would enjoy your retirement way before retirement if you would listen to the things I've been talking about for the past 7 webinars. You don't have to wait on what society deems 59, 62, 75, 65. People are living a lot longer now, so they keep pushing the age out and all these crazy things they do to get you to feel like you have to work longer. you have to understand this. Retirement is when you deem yourself wealthy, and wealth is determined by time, not dollars. So if you have enough investments that are bringing you the income that you need to sustain your current lifestyle, then you are wealthy. See, wealth is not $10 million. Wealth is not $5 million. Wealth actually, believe it or not, is relative. So if you need $5,000 a month, $60,000 a year to be happy, and you are not working, you're wealthier than the person that's making $18,000 a month, right? Over 6 figures a year, but miserable because their bills are $20,000. So put it this way, would you rather make $5,000 a month, $60,000 a year, not working, or would you rather make $10,000 a month, but you work like a Hebrew slave from 6 o'clock in the morning to 9 o'clock at night? See, I'll take the $5,000 a month any day. Why? Because with my time and freedom, I can make the $10,000 a month, because I'm gonna take the $5,000 in my freedom, make more money, and start investing. And you cannot outwork interest. Write that down. You can't outwork interest. That I can promise you. You understand interest on your credit card, don't you? Compound, 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 never catch up, never catch up, never catch up, never catch up. Your investments are the same way. Come here, boy. Your investments are the same way. Compound, 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 compound. Never catch up, never catch up, never catch up, never catch up. Meaning your poverty mindset will never catch up with you again when you start investing. So it's important for everybody listening to understand that your second objective has to be met with investments. Let me make sure we stop clicking over here. Caesar's been featured on every webinar. It's like, cut on the webinar, Brian, so they can see me. All right, go. At least you're not making no noise. So my point to you guys is your second objective has to be met with money. Something has to work, just not you. Now, there are 4 things keeping you from investing. But tonight specifically, I'm going to show you the 4 types of taxation that are the #1 reason most people don't grow their investments. Now, here are the 4 things real quick. 1 is inflation. The cost of living goes up every day, which means the value of the dollar goes down every day. It's not a conspiracy theory. There's not, 10 men in some smoke-filled room talking about how can we kill them financially, how can we get them? That's not what's happening. In America, capitalism, free enterprise, business owners determine how much things cost. So if I can increase the price of my good or service without the permission of the government, then I can control how much your dollar's worth because I'm a business owner. So if gas is up, daycare is up, groceries are up, healthcare is up, businesses keep going up, your dollar is going down if you're making the same amount of money you did last year. So if grapes are more expensive and diapers are more expensive, but you give them the same $20, you got less grapes and diapers. You see? In other words, it's the same $20 bill, but you're not getting a pound anymore. You're getting a quarter of a pound because grapes went up. Now you multiply that by clothes and shoes and healthcare and education and gas and cars and interest rates, and you wonder why you're behind. Even if you get married and start making more money, even if you get a raise and start making more money, you're still hustling backwards because of inflation. We call that the silent killer. There's nothing silent about what I'm going to talk to you guys about tonight. In previous webinars, I talked about debt. Debt is the second thing that keeps most people from succeeding financially, because the bank takes the interest that you're giving and they go ahead and put it on other loans. So you end up giving them more money than you borrowed, and they take the free money that you gave and they go make more money. So debt is a curse. Debt is not a sin. A sin is something you do. A curse is something that's done to you. Debt is a curse. The Bible says the borrower is slave to the lender. Now, I'm not the most religious person in the world. I'm more spiritual than religious, but I know it's a great book with a lot of lessons in it. And all I'm saying is if the borrower is slave to the lender, you may want to be a lender and not a borrower. So here's the reality. Inflation is keeping you from investing because your dollar didn't have as much value. Debt is keeping you from investing because the interest on your loan went into somebody else's created wealth for somebody else, who lent it out, and your interest got passed on to create wealth for somebody else. So you're giving your wealth away when you have a lot of debt, especially revolving debt. See webinar number 6, okay, on avoiding the curse of debt. The third thing that keeps people from investing, this whole webinar tonight is about why you don't have enough money to invest. You got to think about big business. Best Buy, Walmart, Amazon, Sony, Panasonic, all these things are cool. Microsoft, Apple, all Verizon, Sprint, I don't care. All these things are cool. But isn't it crazy how every month there's something for you to celebrate? You ever thought about that? We just got out of Thanksgiving. Before Thanksgiving is Brown Thursday now. Used to be Black Friday. Now it's Brown Thursday because they open the stores up after you eat instead of the next day. Then you got all the sales on Black Friday. Then you now have Cyber Monday. Then in December, you got New Year's Eve. I'm sorry, Christmas Eve. Then after Christmas, you got New Year's Eve. Then in January, you got New Year's. Then in February, you got Valentine's. Then in March, you got spring break. Then in April, you got Easter. Then in May, you got Mother's Day. June, Father's Day. July, 4th of July. August, back to school. September, Labor Day. October, Halloween. Companies make billions of dollars off the candy and open up for 1 week, sell you some costumes, make $1 billion, and see you next year. Then after October is November, we back with Brown Thursday, Cyber Monday, Black Friday in the middle. So big business will strategically get in your pockets, which leaves what? 0 for you to invest. Inflation is up. Debt is up. Big business, sales, and technology is up. And you wonder why you aren't wealthy. Well, it's because most of us spend most of our time making other people wealthy. Hit share, because here we go. With that understanding, the fourth thing that keeps most people from getting wealthy and investing properly, long-term, consistently is synonymous with wealth. Let me say this again. Investing properly, long-term, consistently is synonymous with wealth. Let me say this to you. You can put this in the notes. You can put this wherever you want to put it. Wealth and work are not synonymous. Okay? I know plenty of people that work that are not wealthy. I know plenty of people that are wealthy that don't work. The two are not the same. So consistency, giving it enough time with compound interest, the 8th wonder of the world, will create wealth for you. But you have to have the seed money, what we call the first money, in order to create the capital necessary for you to get the interest to generate the third money. That's what people miss. You don't even have, most people don't in America don't even have enough seed money to get in the game because of these 3 things. And the fourth one is the chainsaw massacre. Your number 1 expense, my good friends, my precious viewers, Wealthathon members, is taxes. Man, hang up. That boy telling y'all something illegal. It's only 2 things certain, death and taxes. Well, let me finish. I know your grandma scared you to death. I know your friends have scared you to death because they stroked the check for $500 to pay some taxes. I understand that. Look, I've been audited twice, right? They still getting on my nerves. So I understand that taxes are a sore subject for someone. But I also understand that most people in America are not wealthy because they don't want to talk about it. So you can ignore it. You can ignore it. I don't want to hear it. I don't want to hear it. I don't want to see it. I don't want to see it. I don't want to hear it. La 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 fa la 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 la, and act like it doesn't exist all you want. What I'm going to teach you tonight as an educator, not an advisor, not a CPA, no certification, just a financial educator who's had some success. What I'm going to teach you tonight is tax minimization and tax modifications, right? Tax minimizations and tax modification. What I mean by that is there are certain levels to the tax game, not tax evasion. Look, this is what I tell people. You want to pay your taxes. You don't want to overpay your taxes. Let me say this again. You want to pay your taxes. Let me give you an example. The FAA is the Federal Aviation Administration. That is who lets the planes know that you need to fly at this altitude and this latitude and this longitude, because this plane is coming at this altitude and this latitude and this longitude. And so y'all won't do like this and hit each other. The Federal Aviation Administration is who controls the towers that make sure we all land safely. Please pay your taxes. You ever thought about that? The FBI, right? The CIA, the people who protect us from terrorism are usually government agencies. Please pay your taxes. I don't care what kind of job you think they're doing. Imagine life without the FAA. Imagine life without international protection. Please pay your taxes. Oh, those streets you drive on and that sewage in some cities that the fact that you got plumbing and water and all of that. Oh, please pay your municipal taxes. Please pay your local and state taxes. See, it's not about tax evasion. The problem with most people is they overpay their income taxes. And that's where you get robbed a lot of times. See, think about this for a minute. That's why I call it the Chainsaw Massacre. Property taxes. In some states, ad valorem taxes. Here where I live in Georgia, ad valorem taxes. Sales taxes, federal taxes, state taxes, local taxes. Then, boy, don't mess around and go to Miami. Whew, y'all got a toll. I was in a rental car one time. I didn't even know the little lane I was in was just hitting my little car for $15 every mile or something crazy. I turned that rental car in, man. They hit me with a bill so big, I almost hit the floor. I end up paying it. But my point is, don't even talk about the bridges. Don't cross the Verrazano in New York. Oh, don't even think about going through George Washington. Oh, you better not get through the turnpike. Oh, Lord. You mean to tell me $20 each time, $18 each time? And you want to tell me that your number one expense is your cell phone bill? No. Your number one expense ain't switching from Verizon to Sprint. Your problem is taxes. Taxes take a third of your income. So before you even see your money, the government already reached in on the W-2 and said, I need that. Then the state reached in and said, I need that. So you got these two entities that are reaching in your paycheck, holding up these huge wads of cash that are really yours, and you saw it second. The government saw it first. Newsflash, my good people. Wealthy people don't get a tax refund. That's all I'm saying. People say, how do I get wealthy? Well, you got to start doing what wealthy people do. Wealthy people don't overpay their taxes throughout the 12 months of the year and then get a refund. Now, I know it's refund time, and I'm not trying to step on any toes. I'm just giving you a new outlook on money. Wealthy people stroke a check. I stroke a handsome check every quarter for my taxes. And I haven't gotten a refund. I don't think I ever got a refund. I retired when I was 22. I was very blessed. So I've always been a 1099. But the check I stroke is after my expenses and my personal salary and my employees are paid. After my contractors are paid. After my son is paid. After Brian Beane is paid. So I lower my tax liability by paying myself first. It's called income shifting. So I stroke a check, but it's considerably less than if they took the money from me without me doing my own numbers. We're going to talk about that in a second. So my point to you guys is means again. Fund means money. A tax refund is your money again. So your CPA didn't do you a big favor and do some magic formula to get your tax refund. That's the money that you overpaid. That's why they call it a refund. It's a refund. Means again, fund means money. Here's your money back. So let me ask you a question. Let's say your refund is $6,000, right? $6,000. This is not tax evasion. This is tax minimization. This is tax modification. Tax evasion, just so you know, that's when people always want to bring up the worst story in the world and they bring up the people who did something totally against what you're talking about here, what we're talking about here. Oh, Lauryn Hill. Oh, Wesley Snipes. People love to use poor Lauren and Wesley for their big examples. You can't tell the government you made 7 million when you really made 14 and you didn't even report 7. And you got it somewhere in the Cayman Islands and they find it and it was based on US income. You lied. That's tax evasion. You get in trouble for tax evasion. Reporting one number and you earn something else, you're evading taxes. That's different. We're talking about tax minimization, lowering your taxes. You see? So this is what I want you guys to understand. I'm not knocking your tax refund, but let's say you had a tax refund check of $6,000. All right, what that basically means is you overpaid taxes to the tune of $500 a month, because 500 times 12 is 6,000. Now you got two people. One is getting a tax refund. Give me my $6,000 check so I can go out here and pay off all this debt I got in during the year. Yep, that's exactly what people do. That's what they do. Because believe it or not, write this in your notes somewhere, write this in the comments. Taxes cause debt. You're in debt because of the taxes. See, if the government didn't borrow so much off the top, didn't take so much off the top, you wouldn't have borrowed so much off the bottom. So person B says, you know what? No. Give me my tax dollars up front. Give me my $500 a month. Give me my $500 a month. And then you invest it in a tax deductible account or a tax deferred investment account. Now you got your money up front, but you put it in another tax code that's tax deductible or tax deferred that's drawing interest. Now, instead of getting $6,000 and paying it right back on all the debt that you amassed because of the taxes, you got $500 a month times 12, and your $500 a month is compounding with interest every month. So it's not $6,000. You ended up investing about 18. But keep getting your refund, right? One thing about me, I'm just an educator. All I can do is give you some experiences that have created a great deal of success for me over the past 20 years. And your job, my job is to educate. Your job is to go do the research and see if what I'm saying makes sense to you. The Wealthathon is about giving you aha moments, right? I can't take 30, 45 minutes and tell you how to get rich. What I can do is inspire you to go want to get rich, okay? So let's break this down real quick. There are 3 ways to start minimizing your taxes, not avoiding taxes, not evading taxes. There are 3 ways to start minimizing your taxes. But you have to understand first, taxes are your #1 expense. It's not your cell phone bill. It's not eating out. Ladies, it's not him. Fellas, it's not her. I know you think she's expensive, and she might be, but she's not more expensive than the government. I'm telling you that right now, okay? Relax. Look, he don't even like the government. So, see what I'm saying? I hadn't barked all day. Caesar, come. Come. Sure about it, you train. Sit down. Y'all can't see him, but he just sat down. All right. Just want to have a little fun. Okay, so 3 ways to minimize your taxes, not evade, minimize. 1, revisit your W-4. Brian, what's my W-4? The W-4 is the form that you filled out when you first got your job. It tells your employer how much to withhold for taxes. Now, here's where people mess up, because 1, 2, and 3, the 3 ways to minimize your taxes are all tied together. And I know a lot of y'all are looking for some razzle dazzle. You look for me to tell you how to get a new car, how to get a bigger house, and how to get more liabilities. No, the Wealthathon is about you getting wealthy. So I saved the best for last. Until you understand the tax game, you can forget about getting wealthy. That's why do you think wealthy people always argue about taxes? Tax this, tax that, tax that. because they know that most of their wealth they wouldn't have if they didn't know the tax game. So it's time for you to learn it. The W-4 is the form that you filled out when you first got your job. It tells your employer how much to withhold for taxes. Now, the front page of the W-4, go to irs.gov and you need to print off a W-4. The front page of the W-4 gives you what are called standard deductions. I'm head of household. I'm married. I have a dependent, right? No one else can claim me. All those different things, right? Those are called standard deductions. In other words, believe it or not, you know what's funny? People from other countries, they come here because of our tax laws. They love it. But like you in America, we can't stand it. But it's just so funny. Like people from other countries, they have a different outlook on the opportunities that we have here, which is why they love America, right? It's the land of opportunity. But you guys are not looking at the W-4 like you should, and you're not taking advantage of the opportunity. You're only taking advantage of the front of the W-4, but it has 2 pages, the front and the back. So Brian, what are you getting at? What I'm getting at is if you want to minimize the Chainsaw Massacre, you got to lower your taxes and revisit your W-4. The back of the W-4 are where your exemptions lie. The front of the W-4 are where your deductions lie. The back turns your exemptions into deductions. Brian, what do you mean? Well, put it this way. Page 2 of the W-4 is for business owners. So everybody, if you go back and watch the Wealthathon, I always preach about the importance of you having even if it's just a small home-based business. We even offer you one because we have a home-based business for less than $35 a month. Nothing expensive, not $500. You ain't got to go pawn nothing and save up, and $35 a month which everybody has. And we show you how to become what I'm doing, which is an educator, right? You don't have to do all these webinars and stuff, but put people in front of this information. And now you have a home-based business. What that allows you to do is fill out page 2 of the W-4. In other words, guys, stop leaving money on the table. Put that in your comments. Put that in your notes. Type that out so I know you feel me. Stop leaving money on the table. The government will put more money back into your paycheck because you've justified on page 2 the home-based business needs you have. In other words, guys, that $600 I just talked about, you're telling the government, look, don't give me $6,000 next year, right? Inflation happens every day. Y'all gonna tax my $6,000 because your income tax tax refund is considered income. So a refund on your money gets taxed again. Then you file rapid refund because you need it rapidly. So another fee comes out of it. Then you go pay the debt off that you got into because you're getting a refund check. Where has that gotten you? How's the refund game been going for your family? Is everybody where they want to be? You may want to switch it. You fill out page 2. Page 2 of the W-4 is a projection of what you think is going to happen next year with your business. Because it is a projection, it is an estimate. The first line of the W-4 at the top says, consider completing Form W-4 anytime your personal or business or professional situations change. Let me say that again. Consider revisiting Form W-4, the first line on this paper. Should your personal financial situation change? The minute you open a small home-based business, your personal and financial situation just changed. When you got married, it changed. When you had a baby, it changed. When you bought a house, it changed. It changed. It changed. You haven't changed your W-4. That's why you have no change. Brian, what are you saying? I'm saying increase your paycheck by justifying the offset of getting your money during the year by having a home-based business. The W-4 is the first thing you go look at. Let me give you a quick example and I'm done. I had a young lady I went to school with over 20 years ago. I taught her about this W-4. We went and printed her current W-4. All she had was single on her W-4. She's been married with 2 children for 15 years. She had single. Oh, that's just the front. I did the math. You've been married for 15 years. You should have had a 2 instead of a 1. You have 2 kids, right? You should have had a 4 instead of a 1. She picked up 4 more deductions on the front. We did the math. That cost her about $90,000 over the course of 15 years that she overpaid in taxes. Now, when you create wealth, you'll learn about something called lost opportunity cost. It's not the $90,000 that she lost. It's the unlimited potential that the $90,000 would have given her had she invested it. You can't calculate that money. So I don't know a lot, but all I'm saying is this. Why aren't you getting your money up front? Didn't you work for it? Oh, I know, because you've been getting a refund all your life. So you just feel like this is a little uncomfortable. All you got to do is go read the form. The government tells you business owners fill out the back. Too good to be true. All right, keep saying that. That's the problem. You're absolutely right. How do I lower my taxes? Number 2. So number 1 is revisit your W-4. I hope I've stressed that enough. Go to irs.gov, type W-4 in the search engine, print it off, and now page 2 adds the exemptions to the deductions you have on page 1. You turn that back into HR, and now your paycheck goes up, and we don't go give it to big business. We pay off our debt faster, create more cash flow for you so you can invest way sooner than you thought. That's how you get wealthy, guys. You get wealthy $500 at a time. You get wealthy $30 at a time. You get wealthy $90 at a time. You get wealthy $100 at a time. Write this down, man. It doesn't take $1 million to make $1 million. It doesn't take $1 million to make $1 million. People think that's way far off. It's not far off. You worth way more than $1 million. But you think it takes $1 million to make $1 million. Let me keep going. Number 2, excellent record keeping. Man, these days, y'all better hit share. You got your app, you got all kind of stuff. Hit share, because I'm about to really get into what you really need to see tonight. You got mobile apps that help you keep the records. Take a picture of your receipts, your gas receipt, right? Or actually mileage is better than the receipt. Log your miles when you do business and conduct business. A certain part of the square footage in your house is business, right? I'm sitting here now. This is my great room. It's a decent size. This room is about 750 square feet. I got a office in the back. I got a movie theater / studio upstairs. Movie theater / studio. I do watch Transformers after I conduct my training seminar upstairs. So we write that off too. Hint, hint, clue, clue. So why aren't you using a percentage of your light bill, percentage of your gas bill, percentages of your square footage? You can't do kitchen, hallway, and all that. But your CPA who's certified knows this. But most people are tax preparers that go get their taxes done because their cousin can do it for $90. I pay my CPA almost $2,000, but guess what? She saves me $50. Yeah, so keep letting JoJo do your taxes. And he telling you to have more kids. You should have known then that wasn't a fit. You thought about having another baby. All right, JoJo, if you don't get the hell out of my face. I'm playing, but I'm serious. See, a CPA has a different fee schedule. These kind of conversations and consultations take a different fee schedule. So you don't want to pay to have these conversations. You just want to get your taxes done when that's the number one conversation you need to be having. So when you keep excellent records, which is the second way to lower your taxes, it allows the first way to lower your taxes, which is the W-4 adjustment, to get offset. But you got to show the government that you're running a legitimate business and making an attempt to gain a profit. You're running a legitimate business and making an attempt to gain a profit. Without the receipts and the record keeping, the government can say you have a hobby. You don't have a business. You got to show the government, oh, no, sir. I drove over here. I ate out over here. My square footage in my house is used for this. When people come over, they sign in. Here are my receipts for my entertainment. You see? Those are the things you have to keep. Oh, Brian, Man, that's too much. Okay, stay on your job, get a refund, keep pushing. Hey, somebody got to keep the struggle going. No, I'm just joking. I'm just joking. But no, my point is, do. I ain't even gonna look at the comments on that one. But no, for real, it's your money, so you do what you want to do. But what amazes me is when I teach this, a person will tell me they don't have 3 minutes. They don't have 3 minutes to keep good records, but then they'll ask me to take a picture and put us on Instagram. You can take a picture with me on Instagram and get some likes or some dislikes, depending on who sees it. But you can't file your receipts in that same cell phone. See, it's mentality. So some people never get wealthy. Somebody got it. No, I'm just joking. All right. Number 3. Here we go. Drum roll, please. This is worth the whole wealth-a-thon just to get to this point and get out of here. Investing. Investing is another way to lower your taxes. Investing is another way to lower your taxes. Now, isn't it funny how this has all come full circle before we go? Isn't this amazing? Weren't the two objectives, current lifestyle is paid for by your labor and your future lifestyle is paid for by investing? But the reason most people don't have enough money to invest is because they're overpaying their taxes and giving their wealth away. Isn't it funny how this wealth-a-thon came around full circle? Y'all remember, everybody know what that means. See how I brought it full circle? Let's get into it. In order for you to invest, you got to have money. Not a lot of money, but you got to have something. Well, once you start learning the investment game, you're going to learn that there are 4 variations, if you will, or 4 types of taxation. Before we go, this is worth the whole series that you're watching right now. Level 1, when it comes to investing, you want to ask the person that you're getting the investment advice from, is this investment taxable? That means the money that you're putting in the investment is taxed when you put it in because you got it from a job, so it was already taxed, and it's taxed when you take it out. So a lot of you guys think you're investing, but you're investing into something that's taxable. You're investing into a taxable entity, taxed on the front end and taxed on the back end. You see? So, for example, I talked about on one of the wealth-a-thons, a cash equivalent. Your savings account is taxable. It's taxable. Think about it. The money you put in there was taxed before you put it in because you didn't get your gross when you put it in there. You got your net. So the government took the difference, which is called taxes, of your gross, and you got the net. Well, you took the net and you put it in your savings account. So the net was taxed. So it was taxed on the front end. Then when your little $100 make 10 cents, they want to send you a notice that says you get the 10 cents taxed. Ain't that crazy? The little money your savings account made got to pay taxes. It's a cold world out here. Look, capitalism ain't no fun when the rabbit got the gun. You better get on the right side of it. Another form of taxation is tax deductible. So you're talking to somebody that's got this Series 6, Series 63, all this good stuff. Not me. I'm just an educator. My job is to open your eyes up. You go see them. You say, let me ask you something. Is this investment tax deductible? What does that mean? Well, that means the money I put in this investment, can I write it off and lower my taxes? For example, your IRA. Now, there are different types of IRAs, right? You got simple IRA, you got Roth IRA, you got a SEP IRA. I'm not getting really into those tonight. I'm trying to open up your eyes so that you can go ask the proper questions. You want 9 times out of 10 to know if your investment is tax deductible. In other words, watch this. All right, Brian, I got my money up front, justifiably. right? I got my home-based business. I got my receipts. I adjusted my W-4, which is my way of telling the government to give me my money up front. Right on. Now you're at least playing the wealthy man's game. Now I got my money up front. Now, Brian, oh my goodness, I owe. Look, people kill me. They just hate the word owe. I owe. I'm like, one of my friends, Brian, I owe. How much you owe? Man, I gotta get him $700, man. I said, please switch places with me. 700 little funky dollars? Are you serious? Now I know what you're saying, Brian, everybody don't have it. You missing my point. He forgot that if he didn't owe the 700, they'd have took 20,000 from him. You see what I'm saying? It's just that people with that mindset, they're not used to putting away $50 a month. So the 700 would be there. They rather get the government 20,000 and get a tax refund instead of putting $50 a month away and paying the 700. Oh, but I forgot, because JoJo do your taxes and he's a tax preparer and not a CPA. He didn't tell you about your tax projection so you would know how much to put away. See, that's what you pay a CPA for. We can predict, they can predict and project. All right, put about this much away. So at the end of the year, you owe $3,000, but you don't owe $3,000. That's the money you pay in taxes, but it would have been $30,000 had they taken it. See the difference in mentality? So I'll gladly give a check for $3,000 if it would have been 30 had I gotten it, had I not had my business. Oh, but old JoJo gonna tell you owe. Newsflash, we all owe. Everybody owe. It's how you're giving it to them that makes the difference. So you need to know if the investment is tax deductible. So watch this. You owe $3,000 and you just about to pass out. But if you got an IRA, you stick the $3,000 in your IRA and now you don't pay no taxes because your IRA is tax deductible. I said it. Now, there's different types of IRAs, retirement accounts, right? Simple, Roth, SEP. They all have different tax laws. The problem with the Roth is you can only put $5,500 per year in there. Now, I'm not here to tell you which one to get. I'm just giving you an example. So basically, there's a cap on how much you can put in the Roth. Now, there's different things, you know, your $3,500, $35,000 a year, or your gross, whatever's lower and all this stuff. I'm here to wake you up to something. There's a cap on how much you can contribute every year. But what I do know is if you put the extra money in your retirement account, you now created a tax deduction and you don't have to pay those taxes because the government wants you to have money for retirement, or guess what? You have to rely on them. See, it's a win-win when you get educated. That guy trusts me. I've been thinking. So is this investment tax deductible? The third variation, and we're gonna get out of here, is tax deferred. The best combination of an investment is one that's tax deductible and tax deferred. Woo! What? Oh yeah, tax deductible and tax deferred. What that means is, for example, in I believe, don't quote me, a simple IRA, you can put more money than the $5,500 that a Roth will allow, right? Again, consult your CPA, consult your financial advisor. I'm here to wake you up. But because I'll be honest with you, I just pay people to know this stuff and they do it for me. But I'm educated enough to know that you can put more money in the simple. So people say, well, Brian, the problem with that is you get taxed deferred. Well, is that really a problem? Is that really a problem? Because if the money is bringing in interest and I've had that account for 30 years, then the government is paying my taxes. The interest is paying my taxes because I deferred the taxes because I put it in that type of account. Now, if the investment is tax deductible, meaning it lowered my taxes, and I'm putting it in something that's tax deferred, now you're playing the wealthy man's game. You see? But most of us putting all our money in something that's taxable. Tax on the front end, tax on the back end. Oh my goodness, life is tough. It's a struggle. I need 2 jobs. No, you need a financial education. So ask the person, is this investment tax deferred? And ask them to show you what's tax deductible and tax deferred. I'm not here to sell you a Roth, a simple, or a SEP. That's not my job. What I'm telling you is there are 4 variations of taxation, and they all have the word tax attached to them, which means you need to find out which one is best for your situation. Simple, Roth, SEP. Go do your research. I'm not here to give you that advice. I'm here to wake you up. Last thing, and I got to go, man. I hope y'all have enjoyed this. Tax-free. Brian say, why you didn't tell us about that one first? Well, because most of y'all doing taxable. I had to tell you about that one first so you'll listen to me. So you'll know, you can't get rich in your savings account. Okay, I had to tell you, I had to say the tax-free for last. Some people call it tax exempt. Tax-free. Brian, you mean to tell me there's an investment that's tax-free? Yes. A municipal bond is tax-free. Go Google it. All right? They call it a muni bond for short. Google tax-free municipal bond fund. Google it. Brian, you mean to tell me I can put my money in something that's tax-free? Yeah. Now the government, they not this nice. They're not gonna give you tax-free and tax deductible. You ain't getting both of those. Okay. They love us. They don't love us that much. You can get tax deductible and tax deferred. I just told you about some of your retirement accounts, tax deductible and tax deferred. You can get the combination of those two, but they're not gonna give you tax-free and tax deductible. They ain't that nice. So go Google tax-free municipal bond fund. I'm not recommending investments. I'm not telling you where to put your money. I don't accept investments. I don't take investments. I educate you on what to go do to see people who can, right? So now you know, good people. Now you know. All right, I got to survive this thing called capitalism. If I don't have some investments working for me, I'll be working for money for the rest of my life. I have to do something today so that interest can outwork me and compound so I can be free tomorrow. What is free? Free is whatever the definition means for you. But you can't do it with inflation robbing you. You can't do it with debt and a ball and chain on your ankle. And you can't do it by letting big business keep you from separating your wants from your needs. And you damn sure won't get wealthy overpaying your taxes to a government who cares nothing about how well you do until they start seeing that because they didn't educate you properly, you ended up in their pockets. Learn the game, man. Learn the game. Get those taxes down legally, ethically, and morally. Revisit that W-4. The money's yours. You work for it. It's yours. Keep the good records necessary to justify that W-4 adjustment and put that money in investments that are tax deferred, tax deductible, or tax free.